What is going on, Alpha Hunters? The markets are closed for the week of June the 14th. And I just going to let you know, I'm going to be changing the weekly live stream that I do to 11 a.m. on the morning. Okay, I'm going to go kind of mid-morning time, 11 a.m. Eastern time, that is. And a big reason why I'm going to do that is to kind of give myself some flexibility some later in the day. And also I can get out the midday kind of recap for those people that want to catch it at lunch. They're not able to catch the live stream, but they catch the recap real quick, kind of get what you need to know for the day, that kind of stuff. Usually we do know all the information and the data on the day, usually about 30 minutes after the market's open. Most of it comes out before the market opens, but some of it comes out just after the market opens. So that should give me plenty of time to kind of get in there, see what the market's doing, how it's reacting, that kind of stuff, and kind of get out a recap video for before people kind of get into the lunchtime hour. And that way they don't really have time to join the live stream. There's that option for you as well. But let's talk about what went on this week. We did have a little bit of a gap down here, and to kind of start the week, not a major one, and then we just kind of steadily rose throughout the day on Monday. Ended off the session lows. Nice little day. There you go. Nice little gap down here on Tuesday as well. Broke Monday's low, and that was basically it. And we kind of just went on a nice little run. Basically took out Monday's high as well by the end of the day. Looking pretty good. We got a pretty sizable gap up on Wednesday. Now we got some data, and I'll talk about that after we get through Friday. But nice gap up here, nice run for about an hour, and then kind of set in some choppiness. We got to the Fed there midday on Wednesday, and they didn't do anything different, but it's just, you can see the choppiness that kind of came in there Wednesday afternoon. Nice little gap up there on Thursday, then pulled down, bounced, kind of rolled over. Basically just took out the morning low, and then Wednesday's, Thursday morning's low, and then we bounced from there. Nice little lower wick on the daily. Friday kind of gapped down, kind of a choppy day, but we did grind higher. Ended positive for the day right there at the end of the day. So there you go. It's kind of how the week went. It was mostly around this big gap that we got on Wednesday. All right, so the big data stuff that we got this week was CPI Wednesday morning and PPI Thursday morning. Then we got the Fed stuff, Wednesday midday, but Wednesday morning we got that CPI data print at 3.3%. The market was expecting a 3.4%, and actually prior month was also 3.4%. So that was kind of a little bit of a drawdown there. It's kind of interesting. The market was super happy about that, but it's like, but we've been around that 3 to 3.5% range now for the past like 7 months. But the Fed's having a hard time getting it down below 3%. So market was really ecstatic about it either way. And then Wednesday afternoon, kind of mentioned it before, we did just get a hold. We did not get any interest rate change from the Fed. So there you go. That's how that was. Thursday morning, we got PPI data, and PPI came in at 2.2%. Market was expecting 2.5%, so quite a bit of a drop there. And the prior month was 2.3%. So even just coming in under the forecast is good, but also downtrending the actual data from 2.3% prior month to 2.2%, our current data point, is that's a good trend. We also did get initial jobless claims, which did come in at 242K. So this uptrend is continuing to increase, and the forecast is calling for 225K. Prior month came in at 229K. Not prior month, but prior data point, which should be every week. And there is a data point in here called jobless claims 4-week average. This is a pretty good one because sometimes the weekly initial jobless claims can kind of bounce around a little bit. So this kind of gives you a little bit more of that average, kind of helps smooth it out. And this kind of helps remove some of the noise, gives you a little bit of idea of the trend and stuff like that. So it is uptrending. It is starting to uptrend pretty good because we did get a nice little jump this past week. All right, two things real quick that we've also gotten some recent data about, but I'm going to share them because they call them circulated on Twitter. And they're kind of hard to find on TradingView, but this one, U.S. household cumulative excess savings. So basically, since the start of COVID, our early 2020, we had a huge increase in savings accounts for consumers, and we knew that, right? That was all the stimulus money that came in, and we have finally worked all of that off. I thought we were going to get there, late Q1, early Q2, where we finally have gotten there. And that's going to be the question: is what do we do now? What is the consumer going to do? And is the consumer going to continue to spend like they have all of this money saved up? My question is probably not. And will we see it start to materialize in companies' revenues and I guess other consumer spending behavior and stuff like that? It is going to get interesting now that we're starting to get to this negative. How far will it continue into the negative? I mean, basically, obviously, if you continue negative, you're just increasing personal debt, and that's kind of what would happen. So it's going to be interesting to see what happens here. This is a very telling chart, as we have now worked off all of that inflationary pressure that has kind of kept it around. So, I mean, will we see inflation drop as well as consumer spending drop? Yeah, I mean, that probably makes sense. So yeah, this will be a pretty interesting data point to watch, or other data points to watch, as this has now been worked off. And another one that I thought was really interesting to see, and is something that's been making the rounds, and something that we talk about on the channel kind of often, is how much concentration there is into just these big tech stocks. It's crazy. Anyways, market cap of 5 largest companies as a share of S&P 500 total S&P 500. These are the weight of the 5 largest stocks. And you can see back in 2000, it got up to 18%. This is shortly after 2000, got up to about 18%. And you can see back in the early 80s, it was a little bit higher than that. I wish the chart actually went back to the 70s, because in the 70s, we did have some pretty high concentration as well. So it would have been interesting to see kind of where we peaked out there. I actually think we've already taken out that peak, because I don't think it was this high from previous charts that I've seen. But just understand that, I mean, when this run kind of ends, those opportunities start to really lag behind, and you don't even realize it. It's like other things start to kind of pick up and gain ground. And that's something that I've kind of talked about before, and why I don't really like the big tech area, because of it's just overly concentrated. There are so many great areas elsewhere, and I would ride it as long as you can. But that's it. Just ride it as long as you can. Just realize once it's over, it's going to be over for a while. You can see how long. I mean, even this chart that started in the early 1980s, I mean, it took till mid 90s to kind of get back down to below the 14% average line here. So we could definitely take a while to kind of rebalance across the equity markets. All right, take a look at sector rotation for the week, and you can see XLK, that tech concentration that we were just talking about. Yep, there you go, continuing again, just huge outperformance in that area. Real estate actually came in kind of in line with the market. A lot of it had to do with Wednesday. We had a pretty good drop on yields. So there you go. Real estate got a huge jump there on Wednesday morning. And then everything else kind of underperformed, right? Discretionaries, utilities, communications, healthcare, materials, industrials, staples, financials, and energies all underperformed. And one thing that you kind of notice here on the right side, outside of real estate and tech, I mean, discretionary's got a 0.4% gain on the week, basically. Everything else was essentially negative. Utilities is basically flat. Everything else was negative. And, the SPY was positive, pretty good amount, about 1.5%. That just tells you how much tech is just really dominating. And the concentration there is just really helping lift up the S&P 500. All right, take a look at the VIX. VIX not really doing anything crazy. It's just kind of in a spot where it could definitely just hang out down here in the low teens. Market could grind higher. So, yeah, nothing too concerning. Maybe if we made a run and got back above this high from late May, then we could talk about conditions, but we would also have to take a look and see how the market's shaping up. But as for now, don't be shocked if the market continues higher. DXY, the dollar index. Take a look at this sucker. First off, we have a pretty nice base coming in here over the past year and a half or so for now. And the response that we got on the DXY Thursday, Friday after Wednesday's pretty good, drop there. I'm not surprised if we continue higher on the DXY. Not at all. Especially compared to what yields did during Thursday and Friday. But yeah, this looks pretty good. Nice little basing hit here on the near term. Maybe we get a little bit of a pullback out to the side here, and then we bounce later on. I wouldn't be shocked about that. You know, something maybe like this. I wouldn't be shocked at that. But for how much we did bounce there on Thursday, Friday, I would expect it to probably continue higher here sometime over the next month. All right, take a look at the GLD Gold Trust. Not looking too bad here. So GLD, you know, we got two pretty good gaps this week. And one thing I would say is maybe we're going to set in a little bit more of a consolidation and we push up later on. Maybe we do something like this where we just kind of have a, you know, just a choppy next couple of maybe month and a half, 2 months. And then maybe we start to look to bounce up out of here. I was kind of looking more for the pullback down to like the lower 200s, but I don't know. After we've gotten some pretty good gaps this week, and the dollar did pretty good on Friday, and we also were up pretty good on gold. So maybe we just kind of consolidate sideways. Maybe we come a little bit lower. I wouldn't be surprised if we did come a little bit lower, but if we just kind of continue to flatten out here and chop around, I think we'll just base here and probably push higher later on. All right, take a look at the 10-year yields, and yeah, yields dropped off pretty good this week. Last week on Friday, you wanted to see, hey, you know what are we going to do here? We definitely had this trend line, right, coming in through the bottom. I think mine was a little bit lower, something like that. And we did bounce pretty hard last Friday, but we came up into this trend line, and that was kind of the thing that we were talking about back when we broke this down, was watching out for when we bounce up into this. I just didn't think it would happen as aggressively did last Friday, but we did do it pretty aggressively. But then Tuesday, Wednesday, Thursday, Friday, I mean, we just came smashed right down. It hasn't been too often over the past couple of years where the dollar and yields haven't kind of trended together. They'll be up together, they'll be down together, but one will lead and outperform. But we actually have yields and dollar kind of diverging, right? We just saw dollars was up Thursday, Friday, and now we got yields down Thursday, Friday. So we haven't seen that too often over the past couple of years. Maybe we'll start to see that going forward. Time might tell. We might just set up a nice basing in here as well. That, maybe we kind of come down and skirt the 4% level. Maybe the second half of this year. It'll just take time to see how this kind of plays out. But for now, I don't think you're looking to play yields bullish. I think that was a pretty good retest that we got into early part of this week and breakdown continuation for the rest of the week. All right, 10-2 inversion also not really showing like it's going to go back to the positive area. Definitely showing some breakdown as it continues to kind of move lower. So yeah, other than that, doesn't look like we're going to be climbing anytime soon. So just let it do its thing. TLT, I'm not going to look at all the bonds, but yeah, TLT, very nice continuation. Kind of like how we were looking, at the yields. We had this nice downtrend, right? And we broke that downtrend 2 weeks ago. We retested lower, and basically we just bounced right off that downtrending line. It looks pretty good. We might set up a sideways consolidation. We might continue higher. I'd imagine we don't just scream higher. We at least slow down for a little bit. We've had some pretty strong days here on bond prices, so I would expect a little bit of a slowdown, and we'll probably see how things kind of shape up. All right, take a look at that RSP, the equal weight S&P 500, and it did not trade well. It didn't trade well last week. It didn't trade well this week. Outside of that gap up on Wednesday, the equal weight S&P 500 would be down much lower. So yeah, I wouldn't be surprised if we maybe continue to break down later on. Maybe next week, maybe over the next 2 weeks, something like that. But yeah, it just didn't look good, especially with how much we gapped up on Wednesday, and then just immediately just continued to sell down. How did we end intraday? So intraday on Friday, we broke down initially, and then it took us all day to climb back, and that's why we have this huge lower wick. So it doesn't look all that bad. At least you saw some buyers down here. The problem is you were breaking down this lower wick and some of these lows that you were thinking, hey, maybe this will help hold us up. But no, it's like you're still just making lows. And so unless we see some strong action Monday, Tuesday, maybe we see the RSP kind of start to bounce here, but I don't I don't know. Like unless people are selling their tech stocks and rotating into other areas, the other 495 stocks, I don't I don't know if I'd be willing to make that bet right now. But I think my opinion, I would rather have more exposure outside of the big tech area, and that's just my perspective. DIA, the Dow Jones Industrial Average ETF. So same kind of deal, we had that gap up on Wednesday and just sold down. So not too much indifferent. IWM is going to be kind of the same way. So yeah, I just I could see some selling continue to come in. I really could. So I mean, outside of that, we'll just keep it moving. IWM. I mean, look at this move on the IWM Wednesday. Gap up and just sold down so aggressive every day. I mean, the open to close on Wednesday was a -1% here on the IWM. Even though it ended the day up 1.5%, it's still sold down 1% intraday. So yeah, these guys are just not looking good. And then if you go and look at the Qs look like it's in fairy tale land. It's just absolute champagne caviar, and that's just how things are going on the Qs right now. So SPY also doing its thing. I wouldn't be surprised if the Qs and SPY kind of fill this gap that we just put in on Tuesday to Wednesday. But other than that, man, there's not much reason to say like, hey, be looking for the sell. I'm cautious on the market, but guys, you just ride it until things start to look like, all right, maybe we're gonna start to top out. But for now, you just continue to ride it. Just continue to ride it. Alpha Hunters, have a great weekend. Take care.